It is February 5th. Let's get started for today's poll report weekly outlook. Let's have a look. First things first, we know is risk and trading. Please and always use trade capital only. You know the dealio. Some notables I put in Discord just now. We are live. Going to jump in the chat here. Say good morning, everybody. Good morning, traders, and happy Monday. Okay. Earnings this week. We have 492 companies with earnings. Some of the notables we have Snapchat, PayPal, Alibaba, McDonald's, Caterpillar, Eli Lilly. It's Spotify in here, Gilead, Ford, Walt Disney, which is moving off those lows. I'm curious to see what Disney does this week. Under Armour and Spirit Airlines. Anything on Pinterest? PepsiCo maybe. Makes me want to look at like Pepsi and Coke together and see how those play out. So we're fresh off the Fed. Market expectations have shifted from rate decision or rate cut expected in March to now being a delay and pushback to May. That probability grew quite a bit, where there's going to be now an 82.5% chance that the Fed doesn't do anything through March. How does the market take that? We're going to find out. So we're sitting here last week with highs. Let's see. Again, this is post-Fed. So we did have a aggressive sell-off on Wednesday last week, but that sell-off was kind of put in the rearview mirror very quickly as we had Mag 7 earnings on Thursday and Friday. We really had Mag 7 earnings on Tuesday and Thursday. So the market was able to grind out some new highs. The high last week in the S&P or the SPY was 496.05. I just think it's interesting that that big level's at 5,000 just lingering right ahead. Curious if the momentum will get there today or this week rather with 492 companies is going to feel like this is the broader market. I want to take a look at a couple of things. I had some screenshots that I thought were interesting last week. This was Wednesday's closing bell. Obviously things looked pretty nasty. And then this ended up being the end of the week. So the market turned around pretty well. We can take a look at that through FinViz and just explore on the heat map a little bit. So if you go to 1 week performance, here's how everything closed up on Friday. Google still down, Apple still down. Meta crushed it last week and even blew out earnings by just a mile. It was like 3 standard deviations more than expected. 20.51% just last week alone. Nvidia 8.4% just on last week alone. Amazon up 8% post earnings. If we go to year-to-date performance, Nvidia 33.6, Meta 34.19, Amazon 13.08, Tesla. This is why they're saying the Mag 7 is no longer the Mag 7. They're calling it the Super 6. Stupid stuff that they like to latch onto. So it's like AI and Super 6. Can it save the market? 24.38% to the downside on Tesla, which from the drawdowns from December's highs, I think is over 30% right now. But as soon as Tesla did drop and gapped lower, we made some money on that gap lower for earnings, and then we started putting in some 175 by 170 credit spreads to see if that's going to be a bit more of a bottom and a gap fill over the coming weeks. So that is Tesla. Like I said, across the board, there's not tons of bright green on this heat map, which should be over 30%. We do have lots of 10s and 20s. But if we go to ETFs, take a look at this. I thought this was pretty interesting. We still have, I mean, it looks like about half of this ETF tracker is neutral. Now, I mean, there's a lot of zeros and 10% to the downside in this tracker. There's a lot of like next to nothing growth. So again, this feels a lot like last year where the broad market is not really participating. The stocks that are doing well are doing super well, and that's enough to kind of drag things up. And they're doing well, and they're big enough that is dragging things much higher. So that being said, here we are. SPY's at all-time highs. The DIA last week as well pushed to all-time highs. NASDAQ as well retested. Let me check and see if this exactly was an all-time high. So that's 429.85, and last week was 430.24. So we did poke those highs last week on the NASDAQ as well as the QQQs. Volatility index continues to be pretty quiet. Even with FOMC, the market wasn't scared for more than a day. So we are kind of in this lower volatility environment as far as, sub 15 on the VIX. If we go to dollar, oil, gold, silver, some Bitcoin, let me say good morning to everybody. Chris in the house, Gail in the house, Gary, good morning, sir. Trish, good morning. Trish, I'm going to say good morning to Lloyd as well. Keo, good morning. Ruth Ann, good morning. All right. Nice to see everybody. Okay, so let's go dollar index. Dollar index, dollar getting a push to the upside. It was a pretty straightforward breakout. That being said, I did have a chart alarm go off with that horizontal ray. So just that little box that I had in here from last week. We had 2+ weeks of indecision on the dollar index. And it was interesting, though, to see the market push up on Friday. The stock market pushed higher on Friday. This would have been the close if I just did the last day's performance. Ah, fudge. I was hoping I could maybe I took a picture on Friday, or maybe I did week. So this is the week. Well, it doesn't matter. We pushed all-time highs on the broader market indexes or the ETFs, but the dollar was still ripping to the upside. And the dollar today and this morning, not a ton on the vertical axis, so it's a pretty quiet morning. But I was looking for a break on the pound dollar, and for the flex traders out there, we might be taking a trade if that's starting to break out to the downside because the dollar index is looking good to the north. So I think if we go break, pause, and go, or break, retest, go, I'm going to see if this dollar index is truly going to, fill this pocket on the DXY, maybe head back up into these highs once again. I'm trying to think going into last year, we were long the dollar to see if that 100 level support held, and it did. We were long the dollar for quite a while. When we started to get in this area, we were waiting for, um, technically we're waiting for a sell-off, but we were waiting to see, what is the language from the Fed? Are they going to start to pivot? And that, in fact, is what happened. So it's almost like we're right back where we started, where they're pivoting kind of back to higher for longer, right? Inflation data is improving, but the Fed is just not inching or budging on their language to make it seem like the market can just kind of rip as is. And, of course, everyone just expects like, oh, they're going to cut rates, they're going to cut rates. I mean, the reality is they probably have to. I don't think the Fed can continue to service the debt at the levels that it's at. But what is the new normal? I don't know if it's wise or necessary to go back to 0 1%. I don't think it's necessary to go down that low. Obviously, it doesn't. It's great to have cheap money. It's great to borrow and have mortgages at 2.5 to 3%. But maybe those days are long behind us. And whatever. There's bigger problems ahead, and I'm sure it's going to be all election drama coming up in November this year for the U.S. But we just continue to grind and trade. Yeah. All right. So let's do this DXY to the upside. Let me take a look at the pound dollar because I might end up taking a trade. Yep. So I'm going to go ahead and take a stab at the pound dollar right here. So if I jump in and short it, so once put about that's a 210 pip stop. I could probably go halfway back. That'd be one. I'm going to go 150. So I'm going to take a sell trade at 25.57. I'm going to do this on my phone on the pound US dollar. So 25.58 and see if we'll continue to sell off. So pound dollar right here. Make sure that I've got this one available. Positions. Okay, we're good. Pound dollar, sell. And let's go margin wise. Okay, where do I want to take this? So my stop loss, I'll put a stop around 127 and take profit. Let's see if we can just get back to about the halfway point or maybe even shallower. So this overall swing, we're at that 30% level right here. Let's see if we can get back to the 382 or the 50. So I'd be happy at 25. No, that's only 50 some pips away. Let's go down to, I'll go 24.20, 1.2420. So it's about a 1-to-1 right now. Actually, you know what? If this is a bigger swing now that I'm seeing this, if this is a low, this is a low. If this is correct, where we're actually forming that lower high, so high here. If this is a lower high, let's see if we can push our way, back down to this area. So I think the 5-0 or the 618 to be safe and call some decent profit targets. Let's go 2300. Not ready to submit that trade yet. 2300. Okay. So that trade is in. All right. So I'm going to take a stab there. So that's a 25.57. Stop at 127.00. Profit at 2,300 or lower. Potential swing back to 2,000. So looking for a breakout there. If we take some other crosses here on the Forex side, Aussie dollar after a little consolidation, pushing lower. This should be helping our dollar CAD position to the upside. Yep. So we were long dollar CAD. This one's going our direction. And euro dollar. I think euro dollar. If we have a breakout and this trend's going to kick into the dollar upside, euro dollar has room to get back into 105 or lower. Could be straightforward. Let's see. Do I want to take and maybe stab at this one too? So that entry stop loss above that little daily fractal high. See if we can push down and challenge this low. That'd be 105 or less for profit. I don't think that's a bad spot either. So I think I'll go after some dollar strength. Dollar CAD north. Yeah, I like dollar strength. Okay. So get logged in and do that. All right. Yeah, that'll be a trade that I update and flex. Yep, for sure. So that's right here. Going to the trade log, taking a stab at the pound dollar. So dollar pound is one way to look at it. Pound dollar. Sell. Today's the 5th. 2557, 2700, and 1.2300 to 1.2050. And then euro dollar. Sell. Euro dollars 107.43. Stop loss would be it's a 2-day candle move, so it'd be above that FOMC spike around 109. And if we're right, let's take this down to 105.50 or lower. So active DXY breakout, trying to ride the momentum. Okay. Couple of trades there. And I'll get these going on the others as well. Okay. All right, we're good on that. So let me see if we get down here towards 10500. I'm going to put a 10510 chart alarm. And I will probably move my stop loss well before that. I mean, if I'm up 50 to 100 pips, I'll probably move my stop loss to break even or better. If we come into this little cluster around 105.50, I'll probably take some profit just to be safe. Better safe than sorry if we have some dollar movement. So I like dollar index. We've been patiently waiting. We're getting it. This is going to be something to watch to see how this translates into the stock market. If the dollar wants to get stronger, the stock market shouldn't necessarily be going higher. In fact, it should be doing the opposite. Okay. So let me see here. If I go, I got to get this entered in on this account. All right. So trade. Take profit. Okay. Euro dollar. All right, just let me get these entered in. That stop is 109. Okay. I think we're good. Questions? We good? That's updated in Flex. Just going to get Telegram out. Let's go here. Pound dollar. Sell at 122 or 2558. This is the nice thing about having like 5 channels to communicate on. One trade has to go out a bunch of different ways. Stop at 2700. Profit at TP1 2300. TP2 at 2050. All right, almost there. 107 euro dollar 107.42. Okay, good and good. All right, thanks, Don. Appreciate that. All right, that's dollar index. Let's go oil, gold, silver. Oil had a pretty nasty sell-off the last 4 or 5 days in the markets, which actually I'm totally fine with. At the top of the hour, equities on demand, we started at 10 o'clock. I'm going to look at USO. And I think what we might consider doing is, if this is enough of a pullback, I'd like this ideally to be coming back into like 68 or 65 again. But just in case we're going to go, break the trend line, come back and reset, make a flat pattern, I'm still looking for oil to head higher. So I think a USO trade today is okay. It didn't necessarily come back to this, April and May 2023 structure that I wanted if we're looking at trading USO and trading some options. But I do like this right here. And if this is going to be a trend line that holds. So if we hold that trend line, we could do just at the money. We could do a 67 by 66. We could do a 68 by 67. If we want to go a little bit lower and take maybe a third of the premium instead of half. So if we have a dollar spread, we can take 30 cents and be okay with that, but we're risking 70. But maybe give ourselves like a 50 to 75 cent buffer on that. So we'll take a look at USO today and look and see if that's a trade worth considering. Gold and silver. Gold. So the dollar is up. Gold has turned pretty quickly to the downside. I'm still not bearish on gold, but I do think that if the dollar continues to run, we're going to break 2,000 on gold, and this is going to be probably taking out some of the excitement where traders that were like, I want to get long or I am long. I'm one of those traders, but I was willing to wait for confirmation up here at 2100, which we didn't get yet. So I'm not a full-on buyer of gold yet. I would love to see gold settle back into, this is a halfway point of a 2-year range. This is range lows. So if we have a high to low, lower high to lower low, I'd like to see some symmetry in here if possible, getting back into the low 1900s. Then I'll start looking at gold again. Maybe I can establish that position to trend back up. And then we get a break above 21. Um, but again, we're going to find out. It's all about really that dollar and how much follow through we have in the dollar. Silver, if gold is performing poorly, I'm sure silver is as well. Yep, last couple of days, big box to the downside. I'm still buying silver at 18 to 1850. Totally buying silver above 26. Bitcoin, we're trading at 43,284. Still wondering if this is going to be the play. high to low, lower high to lower low. If we get that type of move, I've got support, 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 support that was broken. If we cap this move right here and head back down for a lower high to lower low swing, this is where I would be pretty excited. Put a little smiley face there. I'd like to be buying that spot. So between like 35,000, 38,000, if I could level back into Bitcoin, I would do that longer term. It's funny how the excitement is it's like all the excitement was let out of the balloon for Bitcoin with those ETFs being approved by the SEC. But that was the big run up. There were some awesome gains to be had if you participated in this. $30,000 breakout runs all the way up to 49. That's not chump change. It's up 50 some percent, 55% in about a 3 or 4 month window. Not too bad, but it's obviously had some pretty nasty pullbacks, and we'll see if it corrects a little bit lower, finds that yearly pivot before we get a bigger run. Okay. Any other currencies you want to take a look at? Otherwise, my job for this morning is going to be looking at some of the notables. We played a lot of earnings. We still have some expirations out to 2.9 and 2.16. We'll continue to monitor those, managing the SPY, the DIA, the QQQ, the IWM. Broader market wise, all the three that I had mentioned, 3 of the 4 are at all-time highs. The IWM is still not. And I did have an interesting statistic. Pre-market's down on the IWM. Let's see if I can find it. So some of the content consumption this weekend had something to do with the S&P and the IWM of what happens over, the next like 12 months. Let me see if I can find it here. Define risk. Best performing stocks over the last 5, 10, 15, 20 years. 3, so 5 years, 10 years, 15 years. NVIDIA is number 1 on all 3 of those lists. Pretty crazy. Probability changes there. Okay. So here's the stat. Right now, large cap bull, small cap bear. When we've never had, well, I take that back. We have had discrepancies that the small cap or the Russell 2000 has underperformed the broader market, large cap, by 20+%. I'm trying to think. Those periods were 1985, 1991, 1999, and anytime we've had like a 20+% underperformance. What is interesting is what I'm about to read you, which is pulling this off my phone. What happened following the 3 previous largest Russell 2000 drawdowns when the S&P was at a record high? So that's the caveat here. The SPY is at an all-time high. The S&P is an all-time high. The Russell's at 20+% below that, so underperforming. So over the next year, both indices would rally higher over the next year, with the Russell outperforming and joining the S&P at the all-time high. So in 1997, there was a 19.2% drawdown in the Russell, and the S&P gained 14.3% over the next year, and the Russell gained 36.5%. 1991, the Russell had a 13.5% drawdown, was underperforming. S&P gained 12.1% over the next year. The Russell gained 35.5% over the next year. 1985, 13.3%. S&P gave 17.4 over the next year, and the Russell went 18.2. Okay. So what does that mean? Well, we're going to have to see if this broad market is legit, because if it's not, then okay, I guess we won't go anywhere. But I think that we will. I think if, being an election year, being that the Fed is probably more accommodative than they're trying to let us on to. I mean, yes, they changed the narrative, and yes, the market's changing from 6 rate hike expectations and cuts coming as soon as March to then shifting back and pushing that to May. But the overall anticipation for the official cash rate is only 25 basis points different. The Fed is still likely to cut from 5.5 to 4%, maybe 5.5 to 3.5 or 7.5%. So I think that this gives the broader market a chance to catch up. And how does this happen? Aggressive sector rotation is probably how it happens. Everybody can look at Mag 7 stocks and say, yeah, it's great to pile into those and see and feel like you're, getting a piece of that. I'm doing my job as a portfolio manager to, stuff money into Nvidia. It's like, but when does it turn? Things that happen in the markets when we have rallies like this, they tend to be as reactive to the downside. And I think that's where I don't want to be stuck on the wrong side of that move, because if all of a sudden, you've got nice gains to the upside because you've been forced to participate or feel like you're missing out, and all of a sudden you just get crushed to the downside without having proper protection, or you can't time it well enough, I don't think it's worth it. So to me, I would say the clear trade is if we have a catch up trade this year and the small cap can outperform, I am way more excited about this trade if we can break above this, 205 high. I mean, right there to the highs is 19%. And if we do it from current price, it's even better. So from current price to the all-time highs, we're talking 25%. So I'm much more interested in, history on our side, what happened in the past. I know it doesn't have to happen. It could be different this time, but usually it's not. Usually there's going to be some way for the market to justify this. There's big money out there that could certainly warrant a rally in the small caps. A week like this week, where we have maybe solid earnings across the board, could certainly help. So, everybody follow me, or am I just talking into my phone and you know, just throwing some random factoids out there? But it's interesting. So I am going to be more positioned for longer IWM small caps to see if they can outperform, because I think there's room for it. Obviously, the other stocks. I mean, we had Mag 7 Q4, so they did fine. They dragged the markets to all time highs. Not really a surprise, but it wasn't even. I mean, Google is well off the highs. I mean, we had a low in Google at 136. Um, we went to Tesla with a K apparently. Just kidding. Tesla is still off of a crazy high drawdown from 265 all the way down to 180. But then even Apple still stuck in the middle, right? Are we going to break higher, lower? Amazon broke higher. Meta broke higher. Right? There's Amazon. There's Meta. Meta just freaking crushed it, and then Netflix to the upside. And how about Nvidia? Just ridiculous, right? And I think this is what's amazing and scary at the same time. It's like this kind of ascending wedge and blow it. I mean, just one, two, three, four, just blows that thing out. Look, I'm not interested in calling a top. I mean, this could just be. It's all about Nancy Pelosi and chips. I have no idea, but I do think that the way this looks is, being up 30+% right out of the gate, the first 4 weeks out of the year, good for Nvidia. But how does this move technically and make any sense from this point forward? Because we had a swing, we had a pause. Now we're up into this kind of 18127 extension. It certainly could stretch higher and maybe get to 700 plus. But I would not be surprised if we just take this little blow off level, and when it's done and it goes sideways, we're going to have some type of correction. Some type of correction. Again, if and when I can time that, I'll trade options. Um, but I'm just not interested in like fading a rocket ship. I think that's silly. Don't jump in the way of a moving train, right? So, so yeah, I'm looking at IWM to possibly outperform, not the ism. IWM to outperform. There is certainly confirmation needed. So, I get it that this could struggle a little bit longer. Okay. But I'm throwing it out there for us to be aware of, because the way that this ripped in the holiday rally of November, December, that's what I think it's capable of to get to these highs. If this is going to go up and go up 20 to 25%, it's probably going to do it over, I don't know, maybe 2 to 3 weeks, 2 to 4 weeks, um, maybe. And it doesn't have to be now. Maybe I want to position for it now. It's like I might sit and wait and all the sorts of nothing happens. So I can position for it. I can say, you know what, as long as we don't break below here, I'll make some money. If we want to, trade it both ways and say if it stays sideways for the next, 2 to 4 weeks, I can make some money. But when we break above here, I think that's where I want to be looking for, some aggressive opportunities to get long and see if that can catch up. And even if it's this, even if it just matches or outperforms, if the S&P's up 15% and the IWM is up 15%, fine, good, right? But if the S&P is up 10 to 15% and this is up 25 to 35%, which has happened twice in history, the 35, 35, and 18, it's still outperformed. So I'm just looking for outperformance. That's all. If we get it, I think technically speaking too, it's like it's challenging to, buy all-time highs and keep rationalizing buying all-time highs. But this one at least has a fighting chance for technically a rally gets us to all-time highs. It's a pretty good opportunity just to look at it and certainly, get confirmation and hopefully participate and make some good money. So that's why I like IWM. Fair? Okay. And that being said, we still have the swing here. It makes a lot of sense technically that we're just kind of fumbling around in this halfway zone, but we get a push. This is what's kind of nice. We don't have to stop here. If this is a swing and this is a swing, wouldn't it be nice to get this up to symmetry? Where all of a sudden we don't just stop at the all-time highs, but we rip through this at 260, 270, 280, and all of a sudden we have a 30, 40% upside? Yes, please. That'd be nice. So that's what I want to watch. Okay. All right, that's small cap stuff. We've got large cap, small cap. We've got some earnings this week. I don't know how aggressive we're going to be on some earnings. I think Eli Lilly might be the crazy one to look at. This is before market tomorrow. Ever since Ozempic came out, it became the influencer craze on weight loss instead of diabetes. Eli Lilly's been just ridiculous. I think it overtook Tesla in market cap. Let me double check that and confirm. LLY. LLY, ugh, just ridiculous, man. $633 billion, $651 billion, and just insane, right? This is over 100% gain since March of 2023. 121%. So with a weekly candle in a daily or a weekly trading range around $32, the week so far, low at 683, high at 692. We've only moved about $9. ATR for the week is 30, and I think this is worth exploring for an option trade. Just because I think there's a new level of volume. I mean, the average trading volume for 30 days is 2.73 million shares a day. That's a lot. With only a $9 move, and we're about a third there. If we match the ATR, and maybe we have an earnings play that I have a feeling the earnings play is going to be less. But let me take a quick peek at the daily and see when these earnings have popped. So earnings here, which is this week. Last time we had an earnings report, let me find that candle. So we had 578 with a low of 566, but then within 5 or 8 days, runs up about 50 bucks. So yeah, I definitely want to play earnings on Eli Lilly this week. I'll take a look at that. Ford, if we have a good upside on Ford, I'd love to get rid of my shares. I own it like at 11 and change. I'd like to get rid of it at 14.50 to $15. Alibaba, we've got some skin in the game on Alibaba and Baidu. If we can hold the levels and have some decent earnings, that could help us with some of our credit spreads. PayPal, Disney, I'd like to get Disney to revisit some lows. If it does, great. I'll probably get back in. If it doesn't, I don't know. I'll probably just look at something on Disney. It's not going to be a big earnings mover. Under Armour, I own some shares. Trying to buy that thing at pretty much all-time lows, and the rest is not really that interesting. I just did, is On Semiconductor one that I want to look at. I mean, I'd be embarrassed to see this thing having a move like Nvidia. Okay, so is On one that you want to play? I mean, in the semiconductor space, we had AMD, we had TSM, we had Nvidia. I'm sure there's other ones, but I'm just not jumping around saying like this has to be everything semiconductors. I don't really care. There's other stuff. Isn't yeah? It was all Ozempic pretty much. So crazy run. Yep. And the nice thing is there's enough volatility around it now that it's making crazy headlines. I wonder if the volume is enough so that we get a, 30, 40, $50 move this week, and we can position for something where we can maybe max out at like a 10, 15, $20 profit, and the probability just blows us out in a good way. We can go both ways and hopefully have a, 30 to $40 candle over this week and next week. So we'll take a look at that one. So that's before market tomorrow, so we'll price that in today during class. Okay. All right. I'm trying to think what else for the week. I do have some trading battle stuff coming up. If you've ever joined me in the trading battles the last couple of years with 8-cap, they're a lot of fun. I'm facing off against Blake Morrow in the next couple of, I think it's next week. We do one I think it's next Tuesday. So I think on the 13th, we're doing a trading battle. I'm not sure what instruments we're trading. It's going to be hosted by Boris Schlossberg, and we will see what the challenges are. Most likely, could be Forex, could be commodities, could be a stock, could be an option. So we'll figure it out, but it'll be fun. Looking forward to having the circus start back up and being a part of those trading battles. Trying to think. I've been doing some deep diving over the weekend. Consumed a ton of content, listened to podcasts, caught up on some good stuff. yeah, you'll hear about it this week in the trading rooms. Really quickly before I go for today's session, again, if you have any charts you want me to take a look at, let me know. This next week, a couple of private workshops. I'll be addressing that. Some of the students and followers that reached out to me. Affiliate links. I did get this updated, so just real quick, I'll drag this over here for the Discord group. And by the way, if you're not in the Discord group, you are free to join. Here is a link to join. So this is Discord group chat. Okay. And then in my affiliate links, so a couple things. I do FOMC with A1 Trading, Nick Sayak and team, and they gave me a 40% off code for their AI dashboard. It is called Edge Finder. And when I was on the show on Wednesday for FOMC, I saw like another, just 5 or 6 tools they've added to it. They continue just to like add all this data, have all these API add-ins. So it's an awesome tool, and 40% off is huge, and it's a one-time payment, by the way. So if you are in A1 trading or join A1 trading with the Edge Finder, it's a one-time payment where you have it and you have it. It's yours forever. So that's a pretty good deal, especially at 40% off. So I would take advantage of that if you're interested. The AI dashboard's awesome, and I mean I reference it pretty much every day. It's just a great thing to look at. What's smart money, what's dumb money. Looking at central banks, looking at gold, silver, commodities, CFDs, ETFs, just tracking everything. Um, Good stuff, and it's all in one place, which is great. Trading View. You see me use these charts every single day. Traders in, my trading rooms, I use these charts every single day. There's an affiliate link if interested. I always tell people, if you have TradingView charts, just keep re-upping your membership with Black Friday specials. I've been with TradingView for probably, I want to say 10 plus years, and I think my membership is now out to like 2026, because every time they do a Black Friday special, I'll just buy in and add another year to my membership. So um, it's cheaper. I mean, I think it's $600 or $700 a year. I get it for 40 to 50% off, and I just keep building that out. So there's an affiliate link if you want. And then on tradingindicators.com, I know the developer and the team, Daniel Sinig, they do a fantastic job. I've used this. In fact, I just did it this week. Let me see if I can find my architect. So I just built a robot that I tested over the weekend, and I'll show you that right now before we go. Gold and silver. Yep, we took a look at that earlier, but I'll revisit that. Sure. Let me see if I can bring up the architect. So I did a little back testing on a robot. I was trying to build, and this is challenging. This was my goal. I tried to build a robot that I could run full auto in a trending capacity. Now, you should know this as a trend trader or range trader. It's very difficult to trade full auto. I mean, in fact, I've probably built a dozen systems, literally a dozen systems that are all great, but they're discretionary deployment where you got to find the trade, you got to know where to buy, you got to know where to sell, you got to know where to take profit. And the robot does great, because in a forex market, 24 hours a day, 5.5 days a week, let a robot run in the environment where it's like, this trend is probably going to go, this is open space direction for this to go from point A to point B. And the robot does a great job. In fact, the robot probably trades better than I do. Problem is, I just can't let that robot trade all the time. But anyway, what I was building, and let me see if I can find it here. Oh, there's my chart. I was wondering where that went. Let me go to documents and portfolio architect projects, and I just did this over the weekend. So there's still a lot more testing for me to do, but my initial tests were pretty promising. If I just go into, again, this is a full auto system that over the course of, I think I tested this from January of 2022. This went up for a return. Let's see here. Total long, short, average winning trade. So we had about a 1-to-1. I'm trying to think here. Profit factor 1.1. Again, and I'm just putting the disclaimer out there. Full auto trend system is very challenging. I'm not done optimizing this, but what I'm happy with to start is right here. We started here, okay, and we ended here. So could I have made this better? For sure. I could have put this on every yen pair and said buy only, right? And this is probably straight up in 3, 4, 500% gains. I put this on every currency pair, all the yens, all the dollars, all the pounds, all the euros, all the Aussies, all the New Zealands, all the CADs, all the Swisses, everything. And I'm trying to get the trade full auto. Right now, there's a variety of time frames and a variety of indicators. So I'm trying to use all these filtering mechanisms in order to let it trade and get full auto. Now, understand, yes, it had a drawdown, right? So we go from like 5,000, we drew down, but that's also with a martingale strategy. So I can change that so it doesn't have the type of reduction that if I lose on a point 0.01, then I get to a point 0.02, and then a point 0.03, and then a point 0.04. So I step myself into bigger trade sizes. We can contain that by the number of trades we take and whether or not we want to use that martingale strategy. To me, I'm a believer that I don't care what account size you start with, trade small, stay small. And I think the step is good. I don't like the martingale and literally double down because after 10 trades of that, you're at a trade size that most people can't afford to be at. So point is, it made money on full auto. That's encouraging. This is a combination. I'm going to see which one's better here, but I have a 1 hour system and a 4 hour system, and I'm also going to deploy this on daily charts as well. So, like I said, I just did some testing over the weekend, um, and I want to see how it does. But you can see all the different currency pairs. If I go to net profit, Aussie dollar, pound CAD, pound dollar, pound Swiss, Euro Swiss. Interesting. Euro Swiss at 805. Pairs like that don't really trend. Euro Swiss is not a trending pair. New Zealand yen trading both ways, which obviously that why you trade it both ways, just buy against the yen, right? Probably make more money. So I'll show that. I'll test that as well. So it's a start. I had a lot of fun with it, and there are so many cool features to that robot that I'm excited about it. So that was my weekend. Okay. All right, let's take a look at gold. Gold. Yep. So just revisiting this one for ideal concept and trading. Gold is this. Look at the DXY. DXY's up, and I'm going with that momentum. So just this morning, as we started this live session, I went short pound dollar, short pound dollar, short euro dollar, and we're already long on the dollar CAD. So I'm staying long dollar CAD. I'm short dollar I'm short pound dollar, short euro dollar, and I'm just going for this. Look, I think the dollar is in a range where this is a fake out. This is the real support level, and even if we come back into this high and we get back into maybe this consolidation area where we go to 105.50, 106, I think the dollar break, retest, and go. Fair, right? Why? Because all of a sudden the expectations are the Fed's going to stay higher for longer. That shifts the expectations that the Fed's going to be more hawkish compared to other central banks. I think that the ECB, the BOC, the Bank of England, right? We know the Bank of Japan is already dovish and going to stay there. I think other central banks are ready to start cutting. I just wonder, can they hold on long enough? Are they going to hold on long enough to wait for the Fed to officially cut in May? I wouldn't be surprised if we see other central banks cutting before the Fed, and which makes this a little bit more appealing, more attractive. And this would be a case where this could be buy the rumor, sell the fact, right? Buy the rumor, sell the news, which the rumor is that the Fed is not cutting rates as early as the market anticipated, therefore a stronger dollar for now. And again, if I'm wrong, then how do I know that I'm wrong? We get back in the yellow box and we reverse. So I'll stop out and reverse, you know? But if we have a simple, we pushed up here, we paused, we pushed up here, we paused, we pushed up here, if we pause and go, or we just keep going, that's why I'm long the dollar. So going back to gold to tie this all together, gold, because the dollar had a breakout, gold is heading lower. We've had 2 solid red days, and I'm still not jumping into gold bearish, but if we break below 2000, I'm looking for this. I don't really love that high because it was just such a crazy, kind of holiday illiquid high. But if it's high to low, lower high to lower low, I could see gold breaking 2000, having a little bit of runway to the downside as the dollar gains and as the dollar tops out at that 105.50 to 10600 level. Great. That's when I'd start pinning some of the resistance levels on the dollar, start looking to short it. If gold is down here, gold is extremely attractive to buy at this area. If it goes any lower, it gets even more attractive. And longer term, and we talked about this early in the year, one of my bigger forecasts and I think more optimistic forecasts is I like gold long for sure. It's just getting some confirmation. But for right now, if the dollar index is going to be breaking higher, that's going to put some market pressure on the broader indexes. And it's 946, so opening bell is in, and dollar strength is not typically equal higher stock market. So this is going to be an interesting week with kind of the broader market earnings, and gold could be heading lower. But if we break 2000, more willing to be short gold. If we don't, and it just gets chop suey up here, I would just stay out of it and just wait. I'm still bullish on gold above 2100. Okay. All right. Good on that. Good on that. All right. Let me write a couple things down. Oh, fudge. Today is a week from the broken arm. I want to look at USO. Look at USO. I wanted to do an IV rank scan for some iron condors. And I'm going to do some earning scans for the 40 to 50 day windows. Okay, that's what I'm going to try to do this week. See if we can find some trades. Earnings plays. Oh, yeah, LLY. I want to get in some Eli Lilly and see if we can play an earnings play. I'll probably go out to the 16th or the 23rd for that. Okay. All right. I think I'll wrap it up there. Give me a little breather. I like to sip a little coffee before I start the session at 10. If that's it, I'll wrap it up there. Thanks for being with me. I'll be back on Wednesday at 12 noon for a midweek market recap or midweek market minute. And look, I hope if you could do me a huge favor. I mean, I'm just asking everybody here what does help with this YouTube stuff or anywhere you're watching me. I mean, I stream this on Facebook and LinkedIn and YouTube and Twitter, X, whatever. Um, all you have to do is hit like, that little thumbs up button. I don't care if you're watching this on Facebook, if you're watching this on Twitter, if you retweet it or click the little heart icon, or on YouTube, if you just hit the thumbs up button, if you're subscribed to the channel, that truly, truly helps. So every week I notice I get somewhere between like 250 and 300 views on each one of these videos. Some of my lessons and, evergreen content that gets thousands of hits. That's great. But it does go a long ways to just, if you like the content, you like coming in and following me, hit that thumbs up button for me, please. That does help and goes a long way. So that is what the algorithm apparently needs. And even if we only have, 100 people watching live, but we have 100 likes, that says something about, the content, right? So I would really appreciate that. And there we go. Let's have a good week. Okay. All right. I'll see you on Wednesday, and in the trading rooms, I'll see you soon. All right. Thanks, everybody. Take care. Bye.